Welcome, everyone. Today, we're going to cover a market entry case. Before we get started, I should remind you that we provide one-on-one coaching. If you'd like to book your free 15-minute intro, please go ahead and book it over our website, Prepmatter. Let's get started.
Yeah, let's get started.
All right.
All right, Deniz. So our case is going to be a market entry case in South America, in Brazil. Our client name is D&DA Investments. They are a large conglomerate operating in various sectors, and they currently want to enter the financial services sector with their new tool called Prestimo, which is an online/mobile loan management tool for SMEs, small and medium-sized businesses. And they try to enter this market. They're quite dedicated, but they wanted to double check the feasibility of this investment. That's why they hired us, and that's your role, your task to check whether this is a feasible assessment or not.
All right. That sounds super interesting. Thank you for this opportunity. Let me just recap the problem, making sure that I understand it correctly. Sure. The client's from South America, from Brazil, and their name is D&DA Investments, and they are a large conglomerate, and this time they want to diversify into the financial services space. I would even say perhaps in the fintech space. They want to launch a new online tool called Prestimo, which is going to be a tool served for SMEs for their loan management. And they hired us to double check its feasibility. Did I get it right?
Yeah, exactly. That's
okay.
Right.
Perfect.
How would you approach it?
So before I come up with my initial structure to the case, I'd like to ask a few clarifying questions just to deepen my understanding of the case.
Sure.
So first of all, you mentioned earlier that the client has investments in other fields. Is it safe to assume that it is going to be their first time getting into finance and tech space, or do they have prior investments?
Yeah, that will be the first time in the finance and the tech sectors. Yet they have huge companies in other industries, and they have huge data and IT departments in those companies. So they're quite familiar with the technology, also with the financial sector, just they haven't operated as a player in the financial sector.
Got it. Okay. So the capability aspect will be very important in today's discussion.
Sure.
So far, I understand that they might be able to wing it, but at the same time, they may not be very well suited. So we'll double check on that later.
Sure.
In terms of the tool itself, so do you mind just telling me more about it? What do you mean by mobile loan management tool?
Yeah, sure. So what I mean by mobile loan management is there are small companies that don't really know their financing needs and don't really know how to apply for loans and how much to apply, through which bank to apply. So this tool will first assess the financing needs for all those companies, and then we'll create a financing plan, and then they will process all the loan applications on behalf of the firms. So through that platform, the companies will be able to apply multiple banks for loans. And if they are approved, in our case, if they're accepted to the program, all of the loans will be approved. You can assume that if it's approved, they will take the loan, they will get the money. And that's how it will operate, basically.
All right. So just to summarize that, the app is going to have two different functionalities. The first is going to be more around, perhaps let's call it the education functionality, where based on the financing needs, the tool is going to educate the SMEs, and maybe they'll tell them what kind of loan to apply, for how long, interest rates available, and so on. And the second part of the value proposition is regarding the service itself, which is actually the loan application and loan approval. Just to double check on that, does the client provide the loans, or would they kind of serve as an intermediary between, say, the loan lenders, which could be the banks, as well as the loan takers, which are the SMEs?
Yeah, they will be the bridge between the banks and the companies. So they won't provide the loans directly themselves, but they will just link the businesses with the banks.
Okay, that's super clear.
Yeah.
My last question is going to be regarding the financial or strategic KPIs the client may have. So do we know any objectives that we need to check today?
Yeah, sure. Their financial objective is to reach cumulative profit of 80 million reals.
Okay, perfect. Just to double check, is that EBITDA operating profits, or should I just consider this maybe as cash?
It's a cash flow. Yeah,
Okay.
Cash. So total profit, including everything, not EBITDA only
Got it.
for
Okay.
the next 4 years.
Super clear. If you don't mind, I'd like to take a few moments then, and
Yeah,
then I'll
sure.
come up with my framework.
Sure, please.
Okay, thank you so much. All right, may I start?
Yeah, sure, please do.
All right. In today's analysis, I'd like to look into three main aspects to answer the client's question. First would be to look into the overall attractiveness of the market, specifically the mobile loan application market. And second, I'd like to look into the financial assessment just to check the initial objective of the client. And third would be to touch on risks. So first of all, in order for us to assess if it's a good market to enter, I'd like to actually look into first the client, more the internal drivers. We talked about the capability aspect, but I'd like to further probe into this just to make sure that we can go ahead and launch this product from an operational point of view. Second, in terms of the product itself, the service that we'll be providing, I now have a good understanding of how it's going to work, but I'd like to also understand how we're going to make money, because then it's going to inform the other stages in my analysis. Next is the customers. So it would be interesting to understand what kind of SMEs would be expected to demand this new product. Would we target all of the SMEs, or are there any restrictions, perhaps regional and so on? And then competition. So I would imagine we might be competing against other fintech companies as well as conventional banks. So we need to understand who we'll be competing with. And again, it will later on inform my financial assessment. I'll get into that again in a second. And lastly would be the size as well as the historical and projected growth of the market so that we understand the overall size of the pie. So looking into those elements will help us understand if it's a good business to be in the first place. But then we need to transition into the financial assessment. If I remember right, you mentioned earlier that the client's goal is to generate 80 million reals of total profits in the next 4 years. So to test this for each year, I'd like to understand first the revenue projections, which could depend on how big the market is and our expected projection in terms of the market share. Or we can look into simply our client's capacity. If there is a capacity constraint, we can also look into from a supply side, but I think we'll go more from the demand side later in the case. And in terms of the cost, we mentioned that there could be some recurring costs, the likes of variable and the fixed costs, as well as maybe the initial investments, because we're looking into the cash, not the EBITDA level. So it would be great to understand both revenue and cost projections for me to understand how much profits the client can get. And after looking into the financial analysis, before we conclude the case, I'd like to look into the risks as well. For now, because we haven't analyzed anything yet, I don't have a lot of ideas here. The only thing that I wrote in here is the regulatory aspect, because financial services is a sector that would require heavy regulations, and we need to adhere to that. Maybe we need to grant a license and so on, so we can look into that later in the case. How does my initial approach sound like?
Yeah, super comprehensive. I liked it. Where specifically would you like to start then?
Let's take a look at how the candidate has performed so far. The candidate asked good fundamental clarifying questions, such as what the tool does, the client's capabilities, and their objectives. These questions allowed him to develop a framework that directly addressed the problem at hand. In terms of communication, the candidate managed to establish a two-way conversation with the interviewer by recapping the prompt and asking clarifying questions at the beginning. He also followed a top-down communication approach by explaining his framework, starting with the headlines and then elaborating on the bullet points under each column. While the candidate's framework was comprehensive, he could have provided more examples to tailor it better. For instance, he mentioned that he would look into the revenue model, but could have suggested how the company might generate income. In the financial assessment, he could have elaborated on the types of costs the client might incur. Additionally, he identified only one risk area. Although it's early in the case, sharing a few more risk areas to analyze would have strengthened his approach.
Let's start chronologically. So we said that the client needs to have the capability in order for them to launch this product. You said earlier that they have great access to data and all, but do you know if you need to onboard new directors, maybe from the finance sector, or in terms of the app itself, where are we in the stage of the development of it?
Yeah, so I will not be really concerned about the capabilities, even though we don't directly have a business in the financial services or in the tech sectors, the tech capabilities, human capabilities, and financial capabilities are quite advanced. We need to, of course, reshape the organization a little bit, but we can leverage the existing infrastructure and people resources. So I would not be super concerned about that.
Okay, this is great to me.
Yeah.
Moving on, let's talk about a product itself. So you said earlier that it is going to be a loan application tool or loan management tool.
Yeah.
Is it going to be an app? Is it going to be a website? How is it going to be like?
Both website and the app, so they can access the mobile platform or the web-based online platform, both.
Brilliant. And in terms of how we will make money, so I understand, just to recap again,
Yeah.
it's going to be a tool that will educate SMEs. So I would imagine that they will need to sign up to the system. Maybe we might be charging them certain course fees and so on. And then we said that we will also provide loans. So I wonder if we'll make money from the loan applications or the strategies that we will
Yeah.
devise for them. Do you mind just enlightening me on those aspects?
Yeah, sure. So two revenue streams. First is a commission fee that we will have 1% commission for each loan that's approved. What I mean by that is if there is $100 loan approved, then we will take $1 from that deal. And we will take half of it from the bank and half of it from the business, but we don't really care about that. On top of this commission, there will be a fixed subscription fee, and that fee, annual fee of 1,000 reals for each business using the service.
And would that be on an annual basis or a one-off?
Annual, yeah.
Annual. And I remember you said something earlier, but I'd like to refresh my memory on this. So say that an SME goes ahead and subscribes to our service. Would they for sure get a loan, or would that be a conversion that I need to think about? Because then it will impact my financial assessment later on.
All of the applicants through our application will be granted.
Okay, so this means that I need to transition then into how many SMEs we can onboard. So going back to my framework as well, that was the third bullet point I had in my first column. So I would like to talk about that if you don't mind. What kind of SMEs would be interested in it? Is it realistic for us to assume that from a geographical point of view, because Brazil is a huge country, can we reach every single corner of the country, given that it's an online platform? Or do we have any other constraints that we need to think of?
Yeah, so I have actually some information that I can share with you to help you calculate the total number of SMEs that will be interested in
Sure.
this service. And we think that there are certain segments of SMEs, and I can show you an exhibit now. And in this exhibit, you can find the breakdown of all the SMEs. So
Okay.
please go ahead and interpret the exhibit for me.
All right. So the title of it is Average Loan Outstanding by SME Type this year. So I'm just trying to understand, first of all, what I'm looking at. We have different employer groups based on their size. So the higher we go, the larger the employers are. I see here the average outstanding loans. Quite interested in why I'm seeing this. So maybe if you can just give me a second, I'd like to take a look at the table and then I can share
Sure.
my analysis.
Please.
Okay, thank you so much. Just going back to what we've just discussed before seeing this exhibit, we talked about what kind of SMEs might be interested in our services. And now that I'm looking at this table, there are 4 different employer groups with different levels of average outstanding loans. So this might also indicate their need for loans. And we also see, of course, different numbers of SMEs in there. But I'm just thinking perhaps the employer groups that are regularly taking loans might be in our interest group. Is that safe to assume that?
You can see this annual average outstanding loans in terms of the 1,000 reals. We will be focusing on the SMEs only with more than 100,000 reals loans outstanding.
Okay, so this would mean that in the first employer group, since every year they're taking 500,000 reals of loans, is it safe to assume that we can target 100% of that group, even though there could be a few employers, of course, which might take lower than 100,000, but can I take all of that
Yeah,
group?
you can.
Okay, so that would be 200,000 SMEs. And then we have the other group. So for the second group, I see that on average, these employers are taking 100,000 And just to clarify, did you say that employers 100,000 and above or more than 100,000 would be in our target group?
Yeah, more than 100,000. You can just assume that half of that group will be interested.
Okay, so it's kind of like an equal distribution.
Yeah, totally.
Okay. What about the third employer group? There could also be a few, maybe not as many as the second group, but
Yeah.
would you like me to take any of the third or the fourth employer group?
Yeah, no, let's say 0 for the third and fourth.
Okay. So that means 200,000 coming from the first employer group and half of 600,000, so 300,000. And in total, 500,000 SMEs would be in our addressable market. Now the question is, of course, can we really target all of those 500,000? I don't think so. It looks like a huge number. I'm just quite curious to know what might be some other drivers behind how much
Yeah.
market share we could capture.
Yeah, what might be, do you think?
So let's just go over what we discussed so far. We discussed their size and also that indicates their need for loans. So here we're looking at the whole country. So I would imagine maybe the client may want to start with a city or two. So maybe we just only need to look into those geographies. So the geographical breakdown might be interesting to look into. Besides that, would be also good to understand their capabilities because it is, you said it's a website or a mobile loan. I would imagine not all employers, because here we're also looking at employer groups of only 20 people. And we're also talking about Brazil. Maybe there are some SMEs who may not be tech savvy and so on that may not be able to use our services effectively. So that's another filter I could think about. Would you like me to think more? Or?
Yeah, no, it's fine. So the last point, geographically, you can assume that we can reach all of them. But regarding the digital integration, that's a great point. So I will show you another exhibit now. And in
Okay.
that exhibit, you can see the distribution of the SMEs by their level of digital integration. And you can assume that we will only target fully digital ones.
Okay. So in this exhibit, what I see is 4 different levels of digital integration. And you mentioned that we can only target fully.
Fully digital ones. yeah.
Okay, so the numbers are pretty straightforward. So that's 20%. And would that ratio apply across all 4 employer groups? Because if a company is larger, they might be more likely to be
Yeah.
more digital savvy.
Yeah, that's a great point, but let's again assume that it's evenly distributed.
Perfect. So this means we just need to take 20% of 500,000, which is an easy math,
Yeah.
of 100,000 SMEs.
Sure.
So that would be in our target group.
Right.
Okay, fantastic. So I'm not sure if we can target all of them, but maybe we can get into that later in the financial assessment. As per my initial framework earlier, the next thing I'd like to look into is the competition. So do we know if there is any other app or website out there that is providing something similar to our client?
Yeah, there is no really. This service is really unmatched in the country, and we don't expect any competitor coming in
Okay.
anytime soon.
Okay, because I also know financial services banking is a very local industry, so
Yeah.
maybe that's also another reason. Because I know from Europe and so on, there are a few apps that do that.
Yeah.
But glad to hear that there is no competition right now in Brazil.
Exactly.
Do we expect them to enter in the market anytime soon?
Not in this 5-year time frame.
Okay, perfect. So it is also within our timeline of 4 years or so.
Yeah.
That's fantastic to hear. So lastly, I wrote here market sizing growth, but in this case, since we already have the SME numbers, I can interpret this more as a market size. So I don't think there's any need for quantifying the total dollar value of the size of the pie. Is that okay if I now transition into financial assessment
Yeah,
then?
sure.
Okay, perfect. Just to double check once more, the client's initial objective we said was 80 million reals of profits in the next 5 years?
4 years.
4 years. Okay. All right. Thank you. So now what I need to do is I need to first understand how much revenues we could generate. So for that, we said earlier that there are 2 different revenue streams. So here we're looking at the subscription fee, let's call it that way, and then the commission fee. And for me to quantify these, I need to multiply how many SMEs that would enroll into our program times the annual spend or the subscription fee per SME group. I believe you mentioned the number before. It was 1,000 reals was the subscription fee.
Yes.
Okay. So then what I need to do next is discuss with you if you can actually capture all of the 100,000 SMEs. Do we have any projections related to this?
Yeah, so we have projections. We expect to reach 5% of that total market. due to operational reasons. That's our constraint. And then in the year 2, we expect it to grow to 10%, year 3 to 15%, and year 4 to 20%. So it will gradually increase to 20%.
And can I just take those numbers as granted, or do I need to challenge those figures?
No. Let's assume they're granted. They will happen.
Okay, perfect. So this would mean, for example, for subscription fee, say that this year we target 5% of the total market,
Yes.
and that is 5,000, of
Yeah.
course. So in year 2, since we said it's an annual fee, so is that fair to assume that we'll be able to generate subscription fee again from the 5,000
Yeah,
employers in the next
you
group?
assume no churn rate, and they will all renew it.
Okay.
And then you need to have just incremental 5%, which is 5,000, on top of the previous year.
Okay, fantastic. Since we're looking at the cumulative figures, unless there is any change in our client's expected cost structure, I'm going to accumulate the total number of customers for the next 4 years. May I do
Sure.
that?
Yeah.
Okay. So in year 1, we said that we can get 5,000 customers, year 2, 10,000, year 3, 15,000, and year 4, 20,000. So in total, we're looking at 50,000 customers in total. Of course, there will be overlaps, but the idea is the same. So 50,000 customers that will purchase the subscription fee. And subscription fee we said was 1,000 reals. So if I can just multiply 50,000 by 1,000, this means we can get a revenue of 50 million reals just from the subscription fee,
Yeah.
which is great.
Yeah.
Now, let's move on to the commission fee. I feel this might be a bit complicated. So I remember you said that we can get 1% of commission from the loan that we can provide. So do we know anything related to the average spend or average amount of loan an SME would require?
Yeah, we have it in the exhibit. Remember the first exhibit that we reviewed together, you were able to see the average loan outstanding by segment, and you have the number of SMEs in that segment. So you can, I think, calculate the total amount of loan.
Okay, so basically, I remember in this exhibit, we had the average outstanding loan. So is that safe to assume that they would also get that much of a loan if they were to subscribe?
Yeah, let's do that.
Okay,
Yeah.
fantastic. So what I'm seeing here is 500,000 of loans coming from 200,000 SMEs. And then we had 100,000 loans. Actually, that could be higher than this because we're only taking the upper 50%. So do we have any data related to what might be the average loan of that group?
Yeah, that will probably be like 150K or something, but let's again assume for simplicity that it's going to be 100,000.
Okay, all right, fantastic. That just makes my math easier.
Yeah.
So for the second group, we're looking at 100,000 reals of average loans. And we said that there will be 300 SMEs.
Yeah.
So what I suggest we do is actually maybe take an average of those two employer groups.
Yes, let's do it.
Okay. I would need to take a weighted average, of course, and not just an average.
Yeah. I understand.
So if you just give me a second, maybe I can run the numbers.
Sure.
Okay, thank you. All right, so the shortcut I'm going to take is there's a ratio of 2 to 3. So I'm not going to multiply 500,000 times 200,000 and so on because I don't want to make my math too complicated. So what I'll do is if there's 2 units of 500,000, I'm just going to multiply 500,000 by 2 plus we said 100,000 times 3 because that's like 2 to 3 ratio. So 100,000 times 3. And then we need to divide it by 5, basically.
Okay. Yes.
So 1 mil plus 300,000, so that's 1.3 mil, divided by 5, 260,000. Just for me to sense check that, if I were to take the average of 100 and 500.
Yeah, that's correct.
Okay, all right,
Yeah.
perfect, thanks. So what I'll do is, if that's okay, I'll take this as the average amount of loan that we could grant. And if I can just take 1% of it, it's 2.6K, so 2,600 reals would be the revenues coming from the commission fee per customer.
How much is it?
2,600 reals,
2,600 reals.
which is 1% of 260,000.
Okay. Yeah.
All right. Just going back to my earlier analysis, we accumulated the total customer number as 50,000.
Yeah.
And assuming that this is kind of the representation of the number of transactions, because we talked about overlaps earlier. So all I need to do is multiply 2,600 by 50,000 so that I can arrive at the revenues coming from the commission fees in the next
Okay.
4 years.
Yeah.
Okay, I'll
Let's
just
do
take a
it.
second. So 2.6 times 50 is 130. 1,000 is a million. Wow, that's quite appealing actually. If I'm not wrong, this number is 130 million reals. So that is the revenues coming from commission. So summing both figures up, we arrive at 180 million reals of total revenues, which is great.
180, yes.
Right? Okay. So the next thing I'd like to do is look into the cost side because the objective is 80 million reals in profits. And so far, we can generate 180 million reals of revenues. So I'm hoping the costs will be favorable so that we can meet the objectives. Do you know anything about the cost side of the
Yeah.
things?
What kind of costs do you think we can have?
So let's structure it into two. We have initial investment costs and recurring costs.
Okay.
And within recurring costs, we can divide this into variable and fixed. So for the initial investment costs, I'm thinking of just the infrastructure. So they may not even have an office space for them to run the company. They may need to maybe partner with certain technology providers where they need to pay an upfront lump sum of money. So these things might be under the initial investment costs. And then for the operating costs, in terms of the variable costs, I'm thinking they're going to be working with banks. So I wonder if banks will put any costs on them besides, of course, the money that we will get from them. There could be some other costs related to the service, as well as the courses or the online education that we need to provide if there's any associated material cost per subscriber that we need to look into.
Sounds good.
And for the fixed costs, I'm thinking of anything related to insurance. It could be maybe related to our personnel, not directly linked with the sales. If you're not going to be owning the space, maybe rents and so on. So there could be many other cost items. Can we quantify any of those?
Yeah, sure. So CapEx and OpEx, let's split it like that. And the CapEx is 10 million reals, initial investment. And OpEx, the total running cost, is 33% of total revenues. You can assume that it includes fixed and variable costs.
Wow. So 1 minus 33% is 67%. It looks like a great margin.
That the profit margin, yeah, exactly.
Do we know, just maybe going a bit off track here, but do we have any international benchmarks just to indicate whether these figures are actually attainable?
Yeah, you can really assume that those are like granted. You don't need to challenge them.
Okay.
That's the assumption.
Okay, just wanted to double check.
Yeah.
All right. So if 1/3 of the total revenues are costs, this means 2/3 of the revenues are profits, operating profits.
Correct.
And that is before CapEx. So what I suggest we do is take 2/3 of 180 million reals of revenues, and that would be 2 times 60, 120 million operating profits, which is great. And then since we're looking at the cash we said earlier, or say, profit minus CapEx, this would mean that the NPV of the project could be 110 million reals, which is greater than 80 million. But I'd like to share a couple of assumptions I made along the way. So the first thing is we didn't really account for any interest rates, inflation, and so on. I just treated every year as if there's no discounts happening. So this might actually reduce the overall projection. That's assumption number one. Okay, and then the second assumption we made was that everyone who subscribes will actually get the loans, because there could be still some companies where they might apply for the loans and they might be rejected, but I feel this is not going to be an assumption we'll make.
No.
Brilliant. So financially, this is a sound project then.
Exactly.
Do we need to take out any tax or additional investments at this stage?
No need.
Okay. So then, yes, I feel super confident about the financial feasibility. Now, if you allow me, I would like to move ahead and talk about some risks.
Yeah.
Now, let's review the candidate's strengths once more and discuss a few areas where he could have done better. The candidate showed strong case leadership by meticulously following his framework chronologically. By doing so, he didn't miss any important analysis and managed to address strategic elements first, followed by the financial assessment. He also provided synthesis while transitioning between analysis, allowing the interviewer to see how each question or finding contributed to solving the client's problem. Also, despite the case being heavily quantitative, The candidate managed to drive the financial assessment quite successfully. A few things he did well were aligning on the revenue models, acknowledging that not all SMEs would use the client services, and saving time by summing up the total customers across 4 years. In terms of the area for improvement, he could have managed his time more effectively when reviewing the first exhibit. He spent half a minute reading through the text without offering insights, and then asked for time to analyze it. Instead, he could have requested time as soon as he was shown the exhibit. Additionally, during his financial assessment, he initially believed the payback period was 5 years, which the interviewer quickly corrected. Referring to his notes from the start of the case could have helped avoid this mistake.
What kind of risks do you think there might be?
For this, I may need to take a few more moments if you
Okay,
don't mind.
yeah, sure.
Thank you. All right. So first of all, regulations is something I mentioned earlier as well. We still haven't talked about it much, but I'm quite curious to know if the client needs to adhere to specific regulations that may incur additional costs for the client or certain delays in the timelines. The second thing would be regarding the tech savviness of the SMEs. We said that 20% of the employers would be savvy enough to use, but again, do we have any benchmarks maybe to further validate it? Also, we said earlier in the case that we don't expect competitors now, but I think this is still something the client needs to hear from us because we expected a nice evolution of market share from 5 to 20% gradually. But then if there is a new competitor coming in, then of course our projections may not realize. Do we have any data related to those three risks?
Yeah, sure. So the most significant one is the regulations, and there we are a quite connected conglomerate, and also we have a quite strong legal and regulatory team. So we believe that we can tackle it somehow. And maybe the last one, of course, that's an uncertainty. But for now, we can assume that there will be no competition risk either. So you can feel more secure about the risks now.
All right, perfect. And what about the tech savviness of the companies? Are we confident?
Yeah, we are quite confident. Don't worry.
Okay.
That's not
Perfect.
a major one.
Very good.
Yeah. So do you want to go ahead and conclude the case then?
Yes, I think I have the answer for that. But for this, I need a few moments.
Okay, let's go.
Thank you. All right. So based on our analysis today, I would advise our client go ahead and enter the mobile loan management tool space because of a couple of reasons. The most important thing is that financially, the client should be able to meet their initial objectives of 80 million reals of profits in the next 4 years. Based on our analysis, we believe that they can get somewhere around 110 million reals. And that is because of a couple of reasons. First of all, our market share projections look quite sound. We expect them first to start with 5%, but then gradually go up to 20%. And based on our assessment, it is feasible. And second, in terms of our target customers, there's a huge customer base that we'll be targeting, and about 20% of them are tech savvy, which is also a great addressable market size that we could get. And off of that, as I mentioned earlier, we can get a good market share. And in terms of the capabilities, initially we had some questions related to this, but it looks like they have the team in place and we don't foresee any significant risks related to their capabilities. And as well as the regulations, we believe that the client is quite familiar with the overall landscape. And we believe that after our analysis, they will go ahead and implement it successfully. Unless there's anything else, I'd like to conclude this case this way.
Yeah, amazing. Thank you so much. Great performance. I love it. Thank you so much.
Thank you so much for your guidance.
Yeah,
Thank you.
perfect. Thanks.
In summary, the candidate demonstrated a very good performance in this case study. Now, let's evaluate his performance according to the Prepmatter scorecard criteria. Let's begin with problem solving and insights. Structure. The candidate's initial framework was quite comprehensive, covering all the important elements of a market entry assessment. His judgment was strong, demonstrating excellent business acumen and a solid understanding of the fintech industry through key market dynamics and profitability analysis. In terms of rigor, his calculations were flawless throughout the case. For example, he successfully calculated the weighted average of outstanding loans and considered the cumulative number of customers over 4 years. Although his initial framework could have included more examples of revenue models, costs, and risk areas, he made up for this later in the case by successfully brainstorming market share drivers, key cost buckets, and risks. The strongest aspect of his performance was his synthesis. He consistently provided clear syntheses, explaining the so what of each analysis and proactively laid out his next steps. Regarding communication and presence, let's first start with presence. The candidate displayed a good level of self-confidence and composure, even during the difficult quantitative sections of the case study. Next, precision. Overall, his communication was concise, and his structured thinking helped him avoid rambling when answering questions. He demonstrated good active listening skills. Although he briefly forgot the client's objective, he responded well to the interviewer's verbal cues during both the market and financial analysis. Finally, in terms of relationship management, the candidate worked well with the interviewer, pausing to allow the interviewer to interject or provide additional data points.